Dear students, this is the e-learning platform of Cambridge International School, Dasuya. I am Kamaljeet Sharma, PGT Accountancy, teaching accountancy to the students for grade 11th and 12th in Cambridge International School. And this session is for the subject of accountancy for grade 11th commerce. Before starting any topic or any chapter, we will start with the basic accounting terms, or you can say accounting terminology, which we will repeatedly use while studying accountancy. We'll start with first accounting term, that is business transaction, or you can say transaction. This word transaction plays a very important role while studying accountancy. Transaction means any event or happening which we can express in the terms of money. For example, salaries paid, rent paid, commission received, etc. Any activity which we can express in the terms of money is called a transaction. Few more examples of a transaction. Like when goods are purchased or sold for cash or on credit, or when salaries are paid to the employees, or when interest is paid on money borrowed from the bank, a business transaction takes place. But there are some social activities which are not considered as transaction. For example, if X purchases a gift for his friend, it will not be considered as a transaction because it is social engagement. Next accounting term is capital. Capital is the amount invested by the owner, by the proprietor into the business enterprise. It is the amount with the help of which goods and assets and other collaterals are purchased in the business. Next accounting term is drawings. Drawings means any cash or value of goods withdrawn by the owner, by the proprietor for his personal use, or any private payments made out of business funds is called drawings. We'll talk about liability. Liability refers to that amount which the business or the firm owes to outsiders. Thus, when a firm purchases goods on credit from A, the amount owing to A is a liability. Likewise, when a bank account is over withdrawn, that is bank overdraft, the amount owing to bank is also known as a liability. There are some other liabilities too, that is bills payable, means bills due but not paid, creditors, unpaid wages are also the examples of liabilities. The next accounting term is assets. Anything which is in the possession of the business or is the property of a business enterprise, including the amounts due to it from others, is called an asset. In other words, anything which will enable a business enterprise to get cash or a benefit in near future is an asset. Thus, cash and bank balances, stock lying with the business, furniture, machinery, land and building, bills receivable, money owing by debtors, etc., are all assets. Now we will start with the next term, that is revenue. Amount received from the sale of goods and services is called revenue. Anything which we get by selling the goods and the services in which our business deals is called a revenue. Revenue in accounting means the income of a recurring. Recurring means repeating. that is regular in nature from any source. It consists of the amount received from the sale of goods and services also. It also includes receipt of rent, commission, dividend, interest, etc. Revenue is related with the day to day affairs of the business and should also be regular in nature. As such, the amount of capital introduced by the proprietor or borrowing is not a revenue. The next term is expenditure. Any disbursement of cash, that is payment of cash, or transfer of property, or incurring a liability for the purpose of acquiring assets, goods or services is called expenditure. It means that any type of payment for the receipt of a benefit is termed as expenditure. Expenditures may be classified into two categories: capital expenditure and revenue expenditure. This we will discuss later on. The next accounting term is expenses. This term is different from expenditure. Expenses is the cost incurred in producing and selling the goods and services. According to Finney and Miller, expenses is the cost of use of things or services for the purpose of generating the revenue. It means amount spent for generation of revenue is called an expense. Following items are included in expenses. Number one, cost of goods sold, then amount paid for rent, amount paid for commission, salaries paid, advertisement expenses paid, etc. Decline in the value of assets caused by the use of such asset for business purpose or depreciation is also an expense. Now we will move to the next accounting term, that is income. Income is different from revenue. Revenue means the total amount received, but income is different. As discussed earlier, amount received from the sale of goods is called revenue, and the cost of goods sold is called expense. It, therefore, surplus of revenue over expenses is called income. We'll take an example. For example, goods costing rupees 4 lakh are sold for rupees 5 lakh. The sale amounting to rupees 5 lakh is the revenue. The cost amounting to rupees 4 lakh is an expense. And the difference between two, that is 1 lakh, is the income. It can thus be expressed as income is equals to revenue minus expense. Next accounting term is loss. The term conveys two different meanings. First, it conveys the result of the business for a period when expenses exceeds the revenue. For example, if revenues are rupees 1 lakh and expenses are rupees 1 lakh 20,000, the loss will be rupees 20,000. Second, it refers to some fact or activity against which firms receives no benefit. For example, loss due to fire, loss due to theft, loss due to accident, etc. may be noted. It may be noted here that losses differ from expenses. Expenses are incurred to generate revenues, whereas losses do not. For example, the theft of an asset is a loss, but depreciation is an expense. The next is gain. Gain is a monetary benefit, profit, or advantage resulting from a business transaction or group of transactions. For example, if a building costing rupees 5 lakh is sold for rupees 6 lakh, 1 lakh will be the gain on sale of building. Mind it, gain is non-recurring, non-repeating, irregular in nature, whereas profit is regular, recurring or repeating in nature. The next is purchases. The term purchase is used only for the purchase of goods in which the business deals. In case of a manufacturing concern, goods means acquiring of raw material for the purpose of conversion into finished products and then sale. In case of trading concern, goods are those things which are purchased for resale. In both the cases, the purchase is to make a profit by its resale. For example, if a cloth dealer purchases cloth for sale, the cloth so purchased will be called goods. However, if the same cloth dealer purchases furniture for seating the customers, such furniture will not be termed as goods, but a separate account named as furniture account will be opened for it. The term purchases include both cash purchases and credit purchases of goods. Now, here it is purchase returns. When purchased goods are returned to the supplier due to any reason, maybe not up to the mark or the goods are not good, these are known as purchase returns. Such returns are also termed as returns outwards. Now, the next term is sales. The term sales is used only for the sales of those goods which are purchased for resale purpose. The term sales is never used for the sale of assets. For example, if a cloth dealer sells cloth, it will be termed as sales. But if the same cloth dealer sells old furniture, it is sale of assets. The term sale includes both cash sale and credit sales. And what about sales return? Sales return. Some customers might return the goods sold to them due to any reason. These are termed as sales return or returns inwards. The next term is stock. The term stock includes the value of those goods which are lying unsold at the end of accounting period. The stock may be of two types, that is opening stock and closing stock. The term opening stock means the value of goods lying unsold at the beginning of the accounting period, whereas the term closing stock means the value of goods lying unsold at the end of the accounting period. We have divided the type of stock in three categories. First is stock of raw material. It includes those items which will be used for production of goods but still lying unused. For example, value of cotton in case of cloth mills is the stock of raw material. Second category is stock of work in progress. It is also termed as stock of partly finished goods. It means goods in semi-finished form. Such goods need further processing for converting into products. For the valuation of work in progress, the value of materials used in it, the cost of labor, power, fuel and other expenses on proportionate basis are included. In case of cloth mills, the value of threads and unfinished cloth will be the stock of work in progress. The third and the last category is stock of finished goods. It includes the stock of those goods which have been completely processed and ready for sale but are lying unsold at the end of the accounting period. In case of cloth mills, the value of finished cloth will be the value of finished goods. The next term is debtors. The term debtors represents those persons or firms to whom goods have been sold or services rendered on credit and payment has not been received from them. They still owe some amount to the business. For example, if goods worth rupees 10,000 have been sold to Mohan on credit, he will continue to remain the debtor of the business so long as he does not make the full payment. The next term is receivables. Amount due from debtors and bills receivables is jointly termed as receivables or accounts receivables. The next term is creditors. The term creditors represents those persons or firms from whom goods have been purchased or services procured on credit and payment has not been made to them. Some money is still owing to them. For example, if goods worth rupees 5,000 are purchased from Govind on credit, he will continue to remain the creditor of the firm so long as the full payment is not made to him. The next term is payables. Amount due to creditors and for bills payable is jointly termed as payables or accounts payable. Next term is discount. When customers are allowed any type of reduction in the prices of goods by the businessman, that is called discount. When some discount is allowed in the prices of goods on the basis of sales of the items, that is called trade discount. But when debtors are allowed some discount in prices of the goods for quick payment, it is called cash discount. Next term is profit. Profit is classified into two types: gross profit and net profit. Gross profit is the difference between sales revenue or the proceeds of goods sold and or the services rendered over its cost, whereas net profit is the profit made after allowing all expenses. In case of expenses are more than revenue, it is net loss. Now, dear students, it's homework time. Kindly revise all the accounting terms and learn it by heart because these terms are very much important for studying accountancy. So, stay home, stay safe, but study regularly. Thank you. In the next session, we will continue our next topic. Till then, dear students, to stop the COVID 19, stay home. If you don't think about yourself, think about your loved ones. So stay home, please, but study regularly.